You're listening to the Savings Tip Jar with Dom Beattie and Denise Raywood, brought to you by Savings.com.au, your home of savings news, guides and product comparisons. Hello dear friends in finance, how you doing? I'm Dom Beattie, the editor of Savings.com.au, and it's great to have your company for another episode of the Savings Tip Jar as we digest the main money matters of the moment, chat to an industry expert, and of course swap some practical savings tips, which I'm sure plenty of us need plenty of at the moment, because it is of course a troubling time in the economy as we battle through this fuel price crisis, on top of those other pre-existing crises such as the housing crisis and the general cost of living crisis. It's just not getting any easier, is it? But anyway, on a lighter note, we've got a new permanent co-host on the Savings Tip Jar because, of course, as we revealed in last week's episode, the fantastic Brooke Cooper was unfortunately moving on to pursue a new opportunity. But from now on, I'll be joined in the jar by the wonderful Denise Raywood, our senior finance journalist at Savings.com.au. G'day, Denise. Congrats and great to have you on the pod from here on out.
Yes, nice to be on the pod, Dom. Now, there's been quite a lot happening around the ridges this week. It's quite surprising. Things are moving very fast. What have you noticed from your end, Dom, personally?
Oh, well, yeah. I mean, as we're going to get through pretty shortly at the news, there's been so much going on. I mean, the main challenge for us is working out what stories we do mention in the Savings News Roundup, because there has been so much going on. Yeah, it's hard to have hope at the moment. It's just every day we're thinking, are things getting better? But I mean, I guess this week, you know, sort of getting ahead of ourselves a bit, because obviously we're going to dive into this a bit later with the news. But hearing that the fuel excise has been cut and that's going to bring down petrol prices a bit is some relief. And you know, I've already noticed prices have come down. But you know, the fundamental kind of economics behind it means it's actually not great news for inflation. They keep saying these sorts of excise cuts are inflationary, and you know, maybe that means interest rates are going to remain higher for longer. So yeah, I mean, how are you finding it all at the moment, Denise?
Yes, I'm just keeping my eye on the petrol situation. That's, you know, there's such a flow on to so many things in the economy. It's almost every sector of the economy. So it has a crucial part to play, actually, what people are paying for fuel and how that all pans out and their access to fuel. We're not seeing fuel rationing, and the government's been at pains to say that that's not going to happen. And they also haven't told us, you know, how bad things need to get before that starts happening. I was around in the 70s. I do remember the oil shock of the 70s. And I mainly remember that cars with odd or even number plates were allowed to fill up on certain days. So that was how that rationing played out in those days. But, you know, who knows? Who knows which stage we'll get to, Dom? But, you know, it is not a bad time for us to be talking about savings tips, because, you know, everything's up in the air.
Mm-hmm. Yeah, absolutely. Yeah, well, with that said, what's your savings tip for this week?
Well, this is quite boring, but it's something that I actually do myself, and, you know, I haven't done it this week, and that's meal prepping. Making sure that on Sunday afternoon I do all my cooking for the week. I'll cook about 3 to 4 things. I have everything done. I just have it in the fridge. It's ready to go. But of course, I went away for the weekend, only made a couple of little things, and I'm really noticing it now. It's just a way that you buy your groceries, you prepare your meals for the week. You don't have to buy anything else through the week because you've got your food in the fridge. On my work from home days, it's ready to go. So it's lunches and dinners. And it's a surefire way that it's just what you spend on groceries each week is what you're going to spend in food costs. So yes, I thought I'd do that one today because I'm really noticing the difference when it's not done.
Mm. Yeah, it's an oldie but a goldie, that one. It certainly reduces the temptation as well to go out and buy takeaway food on those days when you just can't be bothered to come up with something to cook. When you've got something already pre-cooked and ready to go, it just needs to be reheated in the fridge. Yeah, it certainly reduces that temptation. And I dare say there's a lot of people doing that at the moment. I've just kind of in my mind I've kind of come up with what I call the lunchbox index. You know, just on my walk from the train station to the office, I'm just noticing more and more people are carrying lunch boxes into work. So they're probably people that have meal prepped and they've got food to take into work rather than going out and buying something in the city. I wonder if that's a good sort of indicator of maybe the troubling times people are going through, that more and more people will be carrying those lunch boxes into work as opposed to going out and buying lunch. So yeah, that's a good one, Denise. My savings tip this week, obviously, is also food related. I don't think we've really seen cost of groceries go up too much on the back of the fuel prices. I've just been having a bit of a deep look at grocery prices lately for the Savings.com.au grocery price index, which I've been steadfastly working my way through to update. It doesn't look like prices have really come up yet, but that could well happen soon because these things can take a bit of time to pass through the system. So if you are looking to save a bit of money on groceries, we've talked about this platform a few times on the podcast in the past. It's called Top Cashback, and they're actually offering a special cashback offer on Woolworths groceries. So if you spend $220 on groceries at Woolworths, you'll get $50 cash back. It's a special offer that's on at the moment. Don't know how long it's going to last. But that's, these days, it's very easy to spend that much. If that's your weekly or fortnightly shop, that's just very likely to be over $200, particularly if you've got a family with kids. If you're going to be spending that type of money anyway, you might as well get some cash back for it. So yeah, check it out. $50 cash back from Top Cashback when you spend $220 at Woolies. And that's my savings tip. All right. I reckon it's time to get into some news then. Yeah, start us off, please, Denise.
Okay, this is a story I covered this week, and it was Westpac has come out and said they expect 3 more rate hikes in May, June and August, which is the next 3 meetings coming up. Westpac's the first of the big bank economists to say that this is on the cards. It would see our cash rate increase to 4.85%. That's getting quite high. In fact, the highest since 2008, which was in the midst of the global financial crisis. It's interesting to note it was on the way down at that stage, not on the way up like it is now. But yes, Westpac says, and it's interesting that you say you haven't seen the grocery prices flow through. They call them second round flow through. So there's a little bit of a lag there where we could expect to see, higher fuel. As we said, it affects so many sectors of the economy. It's going to add, cents and dollars to most things that we buy, most services. Transport is the heart of everything. Westpac has just said we can expect to see inflation with a 5 in front, 5 point something. Obviously, that's a long way above the 2 to 3% target range of the RBA. And as the RBA tells us over and over again, they only have one weapon to fight inflation, and that is to, maneuver the cash rate. So even though we may seem that we're getting hit from lots of angles, our mortgages and our fuel costs, both unavoidable costs, that's all the RBA can do to try and keep inflation at bay. So, probably not a good outlook for the average punter coming up.
Yeah, absolutely. That was a bit of a shocker to read when that one came out from Westpac. And obviously you published the story on savings, and that was getting thousands of people reading it because I think people were so shocked to hear that there's a great chance that we could have 3 more rate hikes. I mean, we've already had 2 this year, so the prospect of having another 3 is a bit of a nightmare scenario. I think a lot of people thought, okay, maybe we'll just have 1 more and then the RBA will want to sit on their hands and see how it all plays out. But yeah, this is and it's quite rich coming from Westpac, where they're out of the big 4 bank economists. They're usually the more what we like to call dovish, a bit softer on their sort of cash rate calls. They're usually expecting that the RBA won't hike that much. But now they've gone the opposite because, as I said, those other 3 banks, as far as I'm aware, are only expecting one more in May. Perhaps they're starting to weigh up their predictions and thinking maybe there will be some more too. But I think it was interesting, something I noticed in the commentary. Petrol prices, higher petrol prices act as something of a bit of an extra sort of tax on consumption. So it does perhaps it reduces inflation in other areas of the economy because, petrol prices are taking so much out of people's disposable income that maybe they don't go and buy that new car. Maybe they don't go unless it's an EV. We're seeing plenty of people talking about doing that at the moment. But yeah, maybe they hold off on doing renovations. I mean, I'm already noticing there's a lot more like flyers in the mail, like junk mail from tradies who are usually just overloaded with work. We had like 3 or 4 flyers this morning, and it was all offering like plumbing services. There was 2 plumbing services. There was some other service. I can't remember what it was. And I was just thinking, I wonder if they're starting to panic a bit. Maybe work's starting to dry out.
I think it's a natural that people are waiting to see. They're just waiting to see what's going to play out. So, yeah, I can understand that.
They can come to an absolute screeching halt. People are shocked by how fast it can all slow down. Like 1 second, traders are absolutely loaded up with work and have got money pouring in, and then suddenly it can all just dry up really, really quickly. And all it takes is a big sort of economic crisis like this one. So, yeah, it's going to be. I mean, it's scary to see how it all plays out, but it is at the same time interesting to witness. So, yeah, we'll see how that all plays out. But moving on to the next news item, and this one we've obviously already kind of briefly discussed, but just revealing the news in full to those that aren't fully across it. Following a meeting of National Cabinet earlier this week, convened by the Prime Minister, the Australian government has decided to halve the fuel excise on petrol and diesel for 3 months. So the halving of the fuel excise will reduce the cost of fuel by 26.3 cents per litre. And so just as an example, on a 65 litre tank, as you might see on a reasonable like SUV, that'll reduce the cost of filling up that tank by nearly $19. So that halving commenced from today and will run until the 30th of June. And I did have a look at whether servos have already reflected this, and I'm happy to see that most of them have and have brought down their prices. I think a lot of them were, around probably close to $2.60. A lot of them now below $2.30 at the moment, which has been good to see, but not all of them. So it is still important to shop around and use those fuel price watch apps like Motormouth to find the best fuel price in your area, Denise.
Yeah, so let's just see how that plays out. Of course, as we've discussed, there's other repercussions with the government stepping in there. I guess they're thinking this is a good short-term strategy just to keep things moving. But, we've got the federal budget next month now. That'll all be up in the air. There's a bit of income that the government's going to forgo. I think it was $2.55 billion that they would have counted on that they no longer have. That means that they might be going back to have a look at the budget and see how that's going to play out. It's not a great job to do that budget at the moment. Anything could happen, as we know. There's a central character at play, and prone to changing his mind and quick actions without much forethought. So not an Australian, luckily. It's a hard gig for central banks and governments around the world to know what's going to happen, as I think they are no closer to having good information than the rest of us are by just looking at social media platforms. So the other thing that I thought is worth talking about this week, and this is can be a good or bad thing for a lot of the punters, is card payment surcharges are to be scrapped on the 1st of October. So as we know, the Reserve Bank of Australia has been looking at this matter, I think since October 2024. It started an inquiry into this. It sort of had announced in a preliminary fashion that they were pretty keen to get rid of surcharges, and that's when the banks stepped in. And they said, well, this is going to reduce our income and we're going to have to put the rates up on credit cards and chop our frequent flyer programs and reduce our interest-free periods. I think they said it's about 660 million would just be from reducing the interchange fee. Now, the interchange fee is what businesses pay to banks. And actually, that has happened. That will be reduced from 0.8% of a transaction cost to 0.3% of a transaction cost. So, yeah, that's quite a big hike. I think one of the things that came up in the RBA report that I read through was that when people were choosing EFTPOS, which is inserting your card and doing your PIN number, which I always got teased for doing, that's supposed to attract a lower cost than using a credit card or going through a Visa debit or MasterCard debit function. And the RBA said at the end of the day, people were just all being charged a flat fee no matter what card they used. And some of them were up to 1.6% for some of those payment platforms, a lot more than what, it was actually costing anyone to process. So I can see the RBA's point of view. They just want people to pay the price that they believe it's going to be. Of course, the banks are already very annoyed by this and have warned there's going to be repercussions. Expect that from the 1st of October. It's interesting too. I think the RBA said only 16% of merchants were passing on those fees directly to consumers, and they're mainly small businesses because it is a big impost. So when you buy a coffee or little things like that, that was the people who, couldn't support those charges themselves. Of course, there's all the usual things. There'll still be charges, and now they'll just be incorporated in the price. And the upshot of that is people that always paid cash will now also be hit with higher prices that they tried to avoid before. But, it's a big thing for, something that personally annoyed me, especially at places where you're not able to pay cash. And I know that whenever I go to a GP, my GP doesn't accept cash. And, I just didn't like paying a surcharge that I couldn't avoid because, it adds up. It adds up over a year. And I think it was $1.6 billion annually all Australians were paying. So, it's a big cost and one that will probably just go underground from 1st of October.
Yeah, I've got mixed feelings about this one. Obviously I pretty much pay with my card every single time, and I don't even really look at the little extra surcharge I'm getting charged. So I'll see it'll maybe be a few cents here or there, which, as you said, does it all adds up over time, and it can be a substantial cost to you. But I just feel like from October, it'll be all prices in the store will go up to reflect that cost. But this will be, as you said, it's only about 16%. So it will be those smaller businesses, those that milk bar on the corner of the street, or that your local Chinese restaurant. I just dare say they'll just put up all their prices by 10 cents or whatever to reflect that higher cost. So in the end, I think there's no way of dodging that cost anymore. Like whereas previously it was like, oh well, I'll just pay cash and then I'll avoid that surcharge. But now it'll just be like, oh well, no, everyone will have to pay extra. For example, at my mechanics, when I'm paying quite a bit for repairs on the car to be done. It can be, up to $1,000 sometimes, and I'll avoid the surcharge because it actually racks up to be quite a bit because it's a big transaction. They let me do a direct debit to them, just a bank transfer rather than tapping with the card. I wonder what they do then, where they won't be allowed to charge a surcharge anymore. So do they just put up all their prices to reflect that? It'll be interesting to see. But another thing as well is what happens to those rewards credit cards that, they give you points when you use your cards and spending. I remember quite a few years ago when they were looking at interchange fees and they reduced those or capped those. We saw a lot of rewards credit cards were much less valuable in terms of the points that you could accrue with your spending, and they weren't as attractive as anymore. And now they're cutting it from 0.8 to 0.3. That's a huge cut. They're just probably not going to be worth it anymore, those rewards credit cards. I currently have one.
The banks have already warned that that's going to happen. That's going to be, the people that love their rewards credit cards, they'll be downgraded. It'll be less that you get out of them, and that's already been. That was one of the banking association's big arguments. But the upshot of that is there was all credit card holders were subsidising these rewards programs, even if you didn't have a rewards credit card.
Yeah, which I was going to say that on the other hand, you've got that, which is a bit of an issue. It's someone who doesn't even have a credit card and they're just paying with their debit card and they're not getting any points out of it.
Yeah.
They're getting a surcharge because this bank needs to fund these rewards points.
That was me, Dom. I never paid with a credit card. It was always a debit card, and wherever I could, it was inserted with a PIN number, but I paid the same as everyone else. And that was one thing that the RBA was annoyed at as well. It wasn't reflecting what people were doing. It was just it had become a flat fee that was very hard for people to avoid. So, you could say that they probably didn't do themselves a favour in the long run by, that system being instituted. Yeah, and it's
kind of why just with this one, I'm not exactly jumping for joy, because I just feel like prices will go up, and the saving that we make from not being hit with those surcharges will be somewhat offset by.
I think modelling took place on that, and the Reserve Bank said it would add 0.1% to the CPI in household goods and services expenditure. So they had taken that into account in their decision, and I guess they must have thought that was 0.1%. Yeah.
Okay. Yeah. We'll cop it. And the RBA hates inflation, of course. So I'm sure if they deem that a little bit of extra inflation as part of this change, then perhaps it is worth it. All right. I think that sums up the main money news of the week. So now it's time to talk to our guest of this week's episode, and that's John Arnott, the director of AMP Bank Go. Let's go. Alrighty, time for this week's Dollar Dialogue. And today we're going to have a bit of a general chat about the savings account market and how it's changed recently, particularly with a lot of people swinging away from those conditional bonus savings account products towards some of those more, back to basic, no hoops, no conditions, savings account rates such as the ones, offered by AMP Bank Go at the moment. Essentially, it's a way to get a good interest rate without having to jump through hoops. And joining us to discuss is the director of AMP Bank Go, John Arnott. G'day, John. Thanks for joining us on the Savings Tip Jar.
Thanks, Dom. Great to be here.
Before we get into our chat, John, I just need to ask you, what is your savings tip?
I think my savings tip is really about stay close to your savings. I think in an environment now where people really value their savings, they want to make them work hard, stay across the savings, be across the rate you're getting, be across what behaviours or what kind of the features of the product are, so you can really get the maximum value from it. So I used to probably keep your savings apart, keep them hidden, keep them on the side, but I'm saying get close to them now so you really know what you're getting.
Yeah, that's a really good tip, actually, for what we're talking about as well.
Yeah.
Yeah, particularly in in a market when interest rates are changing. At the moment they're going up. What you thought was a good deal at the time you first signed up for the product might not be, because you mightn't have received a rate hike, and others might have moved up. There might be new products on the market, such as the one from you guys. We were quite excited when we saw this one launch on the market, because we've been really craving these types of products, because we've been sort of getting over all the hoops you have to jump through with some of these other products, and it does seem like people are crying out for more of these no conditions savings account rates. So at the time of recording, you guys are offering 4.85%.
That's right.
With no deposit or withdrawal conditions, no minimum balance to earn the interest. Are you guys finding there's a lot of demand and a lot of praise for this product in this current market, where people are craving that sort of financial minimalism, without having to worry about conditions and whatnot?
Yeah, totally, Dom. I think we're seeing that people are really looking for two things. They're looking for value, but they're also looking for flexibility. And I think what the AMP Bank Go product does is deliver that. I think often in the past or in the broader market, you kind of get one or the other. You can get good rates, but you get conditions and not flexibility, or you get full flexibility and probably not the kind of same kind of reward or interest that you get through the AMP Bank Go product. So I think it's important that we strike both. And I think for Australians today, it's so important. I mean, we're in a cost of living crisis. People's savings behaviours that they've had in the past are not necessarily what they are today. It may well people in the past have had more confidence they can put more stuff aside for savings. But now people are saying, actually, I'm going to put my savings, I'm still going to discipline, I'm still going to budget, put money into my savings account. But based on the broader environment, it could be the cost of fuel, today or yesterday. People might need to eat into that savings to be able to kind of meet their kind of daily ends meet. And for them to be able to do that and not be arguably penalised for doing so is really important. So I think we're flowing where customers want us to go. And what's kind of somewhat interesting is we're almost going back to where we were probably in the 2000s when this kind of concept of a high interest online savings account came about. And that was all about saying, do you know what? You don't need to go to a branch to manage your savings. You can offer one online. Because there's no branch, there's a kind of lower cost to the product, so you can give customers better rates, but it still had that flexibility. Rightly or wrongly, over the last 10 years, we've seen this emergence of conditions or hurdles that customers need to jump through. And I think it was really telling when we saw a report from the ACCC that said only 30% of Australians are actually getting the rate or the maximum rate on those products, because 70% are not actually meeting those conditions or hurdles, which is not that surprising given the life that we all live today.
Yes, that ACCC report, I think it came out in December 2023, and it did shed a bit of light on, how bad that was. I mean, really, that figure, I think it was, 71% of people weren't getting the best rate on their savings. And I think that shocked people in that study period that they did. And I have to say, I enjoy writing about savings products, and I sort of keep a track of the market. And it seems the most successful savings products since that report particularly have been ones like your own, where we just let go of the complications. Has that been something that AMP Bank was conscious of at the time they decided to launch Go Save?
Yeah, totally, Denise. I think, where we're coming from is we want to be able to kind of reduce the mental load of savings. I sometimes refer to it as take the BS out of savings. Consumers or Australians and small businesses, they've got busy lives to live. And removing the need for them to have to think about, have I done this? How will I do that before the end of the month to be able to unlock that rate? We recognise that that's requires a pretty high level of financial literacy, and equally an amount of time from consumers when, rightly or wrongly, they've got bigger or more important things to worry about. So how do we make it easy? How do we make it customer first? And we're seeing really strong demand. People are prepared to say not always get the best rates, knowing that actually they might pay 0.1%, they get paid 1.1% less, knowing that they're going to get that full flexibility. And one thing we found at AMP Bank Go is we've done some research recently is 7 out of 10 Australians actually don't trust the banks and their savings rates. They don't trust that the rate they're seeing is the rate that they're getting. They don't trust that the banks are not going to kind of behind the scenes make changes to those rates. And we wanted to address that. We wanted to make sure we're really clear on how customers are feeling about savings. We want to encourage saving, which I think is a really good financial discipline. But we wanted to encourage saving, but without penalising withdrawing or putting too many catches and increasing that mental load, which I said is a really kind of real challenge right now for Australians around the amount of things they need to think about. And we want to kind of keep banking close, but not too close, so Australians can get on with living their lives.
Yeah, absolutely, John. Back when I was, saving up to buy my house, and I had, a lot of money, my deposit savings sat in savings accounts, that mental load really took a load on me. And I, particularly those multi-condition type products where you have to not only ensure the balance grows every month, but also deposit a certain amount into a linked transaction account and make several number of transactions every month. And I was finding, while it was probably one of the best rates on the market, there was so many months that I was missing out on that bonus rate and then getting virtually nothing. Because I had so much money in that account, even though interest rates were a lot lower then, that was costing me a pretty penny. So I'm
100%.
not that surprised that people are swinging back to these sort of BS-free, condition-free savings account products, such as the ones from AMP Bank Go, that while might not be the highest rate on the market, it is still a relatively good interest rate. And maybe over the course of a year, you're actually ending up earning more interest because you are consistently getting that top interest rate each month, as opposed to getting it sometimes and missing out on other times.
And Dom, it's a good example, actually. We were doing some research, and if you actually look at if an Australian had $40,000 in savings, which is quite a lot, okay, but it's not far off the median amount Australians save. And if you assumed that they were only doing the conditions for 6 months of the year, 6 months of the 12, and if you actually look at what they would earn on one of these headline rates with conditions versus a fully flexible rate at AMP Bank Go, they would be saving over $1,000. So when you say a pretty penny, I would argue it's pretty pennies plus, right? There's actually quite a lot in that. And $1,000 right now, I think everyone would be really appreciative of. So it goes back to, and that's just half the time not meeting the conditions. And going back to the ACCC report, we said it was actually more like 70%. So if you actually think the amount of value that can be unlocked by choosing the right savings account that is kind of recognising and rewarding your savings behaviour, there's serious money on the table, right? And that's really important. I think we have a responsibility to be able to ensure that Australians are getting the most access to that, particularly in the current environment.
Oh, yeah, certainly, particularly given like right now, $1,000 could go a long way. I mean, think about how much petrol that could buy.
Right now it's probably one tank, but I know where you're going, yeah.
But yeah, for anyone listening that perhaps is looking, okay, maybe I should get a better savings account rate, what's a quick 60-second check that people can do to spot a good savings account rate?
Yeah, so I think there's a couple of things. First of all, work out what kind of saver you are, right? Some people want to put savings in and they want to be able to not touch it. They want the discipline of avoiding temptation and putting it aside. Some people want to kind of save a little bit every month. Some people want to save knowing that they're going to spend it. So I've encouraged people to ask kind of what type of saver they are. Then I'd encourage them to kind of almost, because there's so many products out there, Denise and Dom, how do they actually kind of sort those products? And I think, kind of propositions or sites like yours at Savings.com.au, they really help people be able to kind of see the list of products that are out there and align them back to their needs. And then it's around kind of checking the rates. But that's the start of the journey. I think that's when you actually choose a product. Back to my earlier tip, I think it's also how do you also stay close to your savings? So I'd encourage people, even if it's just a habit where it's once a month, you go in, check your statement, go into your mobile app. Generally, mobile apps will tell you your rate and make sure that what you think you're getting, you're actually getting. Because often when people go in thinking, oh, I'm on a good rate, you realize that behind the scenes, something's changed. So stay close, choose the right product, and make sure that it's not just a set and forget product, that you're continually striving to make sure you're getting the most of the value. So savings can be a really rewarding habit, but it's certainly more rewarding when you feel comfortable that you're making the most of your opportunity.
And with, talk of a couple more interest rate hikes this year, now that we've got the petrol variable thrown in, we're talking some serious interest rates that you can get for your savings given that scenario. And, some banks, and I've been updating the savings rates every day, and there's some sneaky things that go on with, the introductory rate may go up, and that's only for new customers, not helping out much their existing customers with the full rate hike going on. It's a particularly important time to do that, isn't it?
Totally. And I think it goes back to the point that the AMP Bank Go research showed that 7 out of 10 Australians don't trust their savings rate. So to your point around this, almost like a shiftiness that's going on, that what you see is not what you get, that whole kind of WYSIWYG kind of statement. So making sure you stay across. But to your point, Denise, when the rates are going up and there's a higher rate for savings, it doesn't mean you need to have a huge amount of savings in your bank account to be able to kind of earn a decent interest. So, even if you're just putting the cents aside, the dollars start to look after themselves. If you're choosing the right product, it helps you build the right discipline, and you start to see it add up month on month. The interest starts to compound, and in an increasing rate environment, we want to make sure everyday Australians are getting the most they can of their hard earned.
Yeah, absolutely. People will be desperate in this current climate to make their dollar stretch further, for sure. John Arnott, really appreciate your time on the Savings Tip Jar podcast. Thanks very much for your insights.
Thanks for joining us, John. It was great to have the chat, and it's just great to remind everyone that that's a very simple savings tip. Yeah. Just have a look and see what you're getting. It's one that applies to everyone.
Go save, guys. Thank you. Cheers.
Yes, that was John Arnott, the director of AMP Bank Go. And that brings us to the end of another episode of the Savings Tip Jar podcast. Thanks very much for listening. Thanks, of course, to our sponsor, Savings.com.au. And thank you to our guest, John Arnott. And thank you, Denise.
Yeah, if anyone wants to ask us any questions or you have any feedback, we've got enquiries at savings.com.au as an email address. Dom particularly loves going through the emails and dealing with... it's always good. It's always good. And, of course, you can find us on a lot of social media platforms. I think we're on Facebook, Twitter. We have TikTok. What else have we got, Dom? We have YouTube. So, find us and, leave your comments and any feedback or anything you'd like us to explore. And what we particularly like is savings tips, because we are really running out of those after so long. So if you have any savings tips that you think you'd like to share with everyone, we're very happy to pass them on. And we'll, of course, accredit them to the people that let us know, because we're always into savings tips, aren't we, Dom?
Yes, no, certainly. But speak for yourselves in terms of running out. I'm on the other hand, I'm a bottomless pit of savings. It never ends. I've always got savings up my sleeve, so no concerns there. But yes, do send them in. And also, please give us a 5-star review on Spotify or Apple or any other platform you're listening on. That really helps us. All right, till next week. Goodbye. Thank you, Denise. Cheers. Bye.
See you next week. Bye.